Hey, good morning, everybody. Welcome to Tuesday. It seems like we've had a lot of gremlins in our technology system since I've been back from vacation. Hopefully today will go smoother. Again, I want to thank you for joining us today. I hope that you're getting something beneficial from these as we share these every day. And uh, and so I do want to remind you again that we have our free report. And one of the free reports we have is on retirement strategies. And so to make it easier for you, we've given you here the link, and it'll be right above this post too. You can just click on it. But for our strategies on retirement, go to statlerfinancial.net/LM-3 to get your free report on retirement strategies. Hey, Dave will be with us momentarily. Hopefully things will go smooth today, and we'll have a great recording.
Lady Gaga there. It's 8:39, 21 here before 9. Time check out your money and find out what Sam Hill's going on with your IRA and 401k this morning. Downtown Sebring we go to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How you doing?
Hey, good morning, Dave. Hopefully we've got all the gremlins out of our technology now. That seems like when I go away for a little while, the gremlins seem to sneak in.
Well, I was going to say, it was idle for almost a month. It took a little while for the computer to wake up, didn't it?
Yeah, sure did.
I think so. When we were off the air before we went on, just my first observation of the morning is I grew up in a world in which what's good for General Motors is good for America and vice versa. And General Motors having a strike would be one of those things that would just be absolutely earth-shaking. I had to dig this morning to find out what was going on with the General Motors strike. Today, they're just another company with a labor problem. They really aren't coming to the head on the news, but a major automaker with a strike, that's if it's an extended period of time, that's going to put a ripple through the economy, isn't it?
Well, I believe it will, and I've seen a little bit here and there, but it's not like you would expect it to be back in the day when the big three were the big deal. Not so much anymore, but it is. I mean, I saw something a little bit on the brief on the news today. They were telling President Trump, stay out of it. This is between us and General Motors. It's just, hey, it's going to hurt them. It's going to hurt the company. It's going to be interesting to see how long it takes for this thing to wane out. It's one of those things you think, okay, do they not really think? I mean, what caused GM to really go down the bankruptcy tube in the first place was high labor costs. And so I think there needs to be a good balance there, but they need to be careful.
Yeah, exactly. It's not exactly like the other American manufacturers are kicking butt too. Ford stock is wallowing down around $9 a share, so it's not like GM workers are looking at the other side of the pond and saying, boy, they're kicking butt, we want our share too.
Well, that's true. I mean, I think everybody is in the same boat. I mean, they've had a pretty good run, but we're seeing some little bit of deflation, I guess. Not really deflation, but a little bit of lack of sales when it comes to the auto industry now because of interest rates.
Yeah, we'll say demand challenges and call it on that.
There you go.
Best I can come up with. Things driving the economy today, well, we're still concerned about oil prices, but evidently the shock value wore off a little bit for that Saudi oil field disaster because oil prices are back down a little bit, and my transportations and my energy stocks aren't tops on my big winners and losers list this morning. Maybe we're just getting used to the notion we got a few weeks of higher prices.
Well, I think the other thing maybe, Dave, that we finally maybe realized that it was a big deal, but it's only 5% of the global production around the world. So, is 5% a big deal? Not really in the whole scheme of things. And so maybe the United States could actually pick up production and bridge that gap. I don't know what those numbers look like, but I think that's what's happened. The analysts have really come in and looked and said, it's not as big a deal as we thought it was.
And that's always good news. Calm is always better than panic. And I think I've read that now at this point in time, our production capacity is capable of keeping us at energy sufficiency and making us a net exporting country. So from a domestic standpoint, there might be an opportunity there.
I think you may be right there, Dave, but I tell you what, I didn't miss the opportunity to fill up my gas tank yesterday.
Yeah, I'm due this morning because I forgot yesterday, and I may pay the price if the tanker trucks get to the gas station before I do. The other thing that I noted this morning in my morning news briefings, boy, we talk about whether or not there's an economic turndown coming, being more art than science. One of the big investment bankers on our side of the pond last week, while you were gone, was saying, hey, there's no sign of a recession on the horizon. Earnings season showed that companies are doing what they said they were going to do. Everything is perfectly fine. Now, Deutsche Bank this morning, the big German bank, pretty much doing their level best to tank things, saying the Standard & Poor's should be 13% lower than it already is because, doggone it all, there's a recession on the way. Kind of emphasizes the notion that even the experts don't know exactly what the heck they're talking about, right?
That's right. They don't. I mean, it's like you said, it's more art than science. And so, it just takes one thing to start that ball rolling into a recession. And it only takes a couple things to get you out of the recession. So, are we there? You and I have talked about slowing down. Our economy is slowing down, but we're still growing. And as long as we're growing, we're not heading into a recession. So, I'm not sure what they're looking at, but I know when I've looked back before I went on vacation, there were a couple different analysts really looking at 2020, towards the end of 2020, and saying, yeah, we could head into a recession then. Could being the word. Nobody's for sure. And Deutsche Bank coming out, they're really taking a stand that I'm not sure if that's a good place to be.
It kind of struck me as being chicken littleish at the very least. And as you say, it takes an event, and it's always kind of interesting because we've gone through a few of those events that one would expect if we were due to be that trigger. All of our brinksmanship with China, the European Union breaking up with the Brexit situation, now the oil supply quote unquote crisis. Nothing's really rattling the investment markets or the economic engines to the point of actually sinking us down. Kind of gives some faith that we really do have kind of a battleship here in our economy, don't we?
Well, it definitely seems that way, and definitely we're in uncharted territories with the time frame that we've been in this a bull market. So, anybody's guess as to what will happen next.
Understood. What could happen next, we'll be taking it tomorrow because we're entering a 2-day Federal Reserve Open Market Committee meeting. I mentioned yesterday when the telephones went on the fritz on us, Phillip, that it's considered highly likely that the Fed will reduce interest rates by another quarter point, but it's not as lead pipe certain as it was last month, I gather.
No, it's not. And I've read here this last week. I've read a couple different opinions. Well, maybe we won't see a rate cut. It's not guaranteed. And then I see another article that says, Fed's definitely going to cut interest rates. That's what Powell wants. And who knows? But I think more likely than not, we will see a rate cut tomorrow.
The odds are in its favor, but we do have to mention that when we saw the minutes from last month's meeting, it was not a unanimous vote last time, and we're probably going to be parsing the statement more than we will be the actual action when they come out tomorrow afternoon.
I believe you're probably right. I think we'll be looking at the minutes to see, okay, what are they saying about if they cut rates now, what does it look like the rest of this year? And that's going to be probably more important, or at least just as important as what they actually do tomorrow.
One of the articles I read said if they cut the rates and then say, that's it, baby, we're done, that will hurt the market more than if they don't cut rates and say we're watching carefully.
I believe that's probably true. To draw a line in the sand and say, this is it, that's a pretty bold statement.
And the Fed has been known to screw up once in a while, so we're all going to be looking at what happens at 2 o'clock tomorrow pretty doggone carefully. Not a lot of companies reporting. I know you mentioned Cracker Barrel was on the hopper today sometimes, and we're kind of watching at the end of the market. Federal Express has been having its argument with Amazon over shipping, and they kind of declared a tentative separation or divorce there for a little while. They're due to report at the end of the day today. Anything we should be watching today from an individual issue standpoint?
There's 3 companies that are going to report that are probably pretty big names, FedEx being one of them. The other one's Chewy, you know, the pet company that does the catalog and the mail order stuff, and then Adobe Systems is a big one when it comes to PDFs and computer systems and that kind of stuff. So those are the three that report after the market. Cracker Barrel is supposed to report before the market, but I haven't seen anything come across my ticker yet.
I'm watching mine as well, and I haven't seen Cracker Barrel up. So we've looked at what could affect us today. Let's look 45 minutes ahead. Which direction are we heading on the futures markets this morning, Phillip?
So right now, I'm going to say we're coming up pretty red. And it's bounced around, but we're back down towards the lower end this morning. We've got the Dow right now down $86, the S&P 500 down 7, and the NASDAQ down 16 and a quarter. Gold is basically even. We've got silver trading down a little over 0.5%, and then crude oil's off those highs yesterday, down 1.2% to $62.10 a barrel right now.
And you had some advice before we went on the air, and I think you did as soon as we went on. Let's fill up the gas tanks right away before the tanker trucks get to town, right?
That's right, because we will see an increase at the gas pump based on what oil prices have done.
No doubt. World markets overseas kind of responding the way ours are. Mixed bag, calming a little bit. Asia was a split vote this morning. The Hang Seng in Hong Kong was off substantially at their close early this morning. Japan was holding steady. European markets mixed as well. Germany's off by a bit, probably because of Deutsche Bank's stinking thinking. And England actually trading upward in London this morning midway through their day. Phillip, somebody needs some advice to sort this all out. The big banks don't know what they're talking about. Hedging my bets makes sense. How do I stabilize my retirement with a little help from you?
David, give us a call at 382-0037. Look, if you don't know what they're paying in fees, that's a big deal. Fees can erode your return. So give us a call for our financial x-ray, 382-0037. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And back bright-eyed and bushy-tailed tomorrow morning about the same time here on Light FM. Fair enough?
Fair enough, man. Have a great day. I look forward to speaking to you tomorrow.
You too do appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Remind you of our free report. Look, if you are 5 years out from retirement or less, or you are already retired, this is a very important report you need to have in your system. It's on retirement strategies. All you have to do is go to statlerfinancial.net/LM-3, and there you can get your free report. That's all it takes. It's that easy. Get your free report right now. If you enjoy what we're doing, please like and share this post. Have a great day. I look forward to speaking to you again tomorrow.